Snipers, you have to see what's happening to the Bitcoin price this Wednesday, as everyone's asking this question on the Discord right now, and that's whether or not we're seeing a relief rally to see further downside, or if we have truly seen the bottom for Bitcoin at 33,000 US dollars. I'm going to talk about that in just a second, but what you guys need to realize is today we had the FOMC meeting with Jerome Powell, and they did announce, once again, no surprise, white swan event, they're going to be raising interest rates here very soon, right? We all know that markets are forward-looking. They price these things in. But more importantly, what we have to look at right now is what's happening to the Bitcoin price. Notice how we saw a candle move above 38,000 US dollars on this 3-hour chart, but we immediately saw the short sellers come in and bring price back down to retest this 50-period moving average on the 3-hour chart, sitting right at 37,000 US dollars. So I have a very clear pattern that we're going to be watching here to determine whether or not this is just a relief rally, or if we're going to potentially see a breakout of this potential inverse head and shoulder pattern that we have here. And so we know the neckline has a potential target of a breakout of 41,950, and moving above 38,000 was the first confirmation that we needed in order to assume whether or not we are going to be seeing a fulfillment of this market structure to 41,950. But everyone's saying, man, we should have just shorted Bitcoin as soon as it got above 38,000. Well, I'm going to tell you exactly why I think that may not be the case right now, and what we're going to be watching in order to confirm whether or not this is in fact a relief rally. Now, on the hourly chart, we do want to address the hourly volume that came in was less sell pressure than we saw recently when Bitcoin came below 34,788. Could we assume it was the same institution that bought the dip at 34,788, waited for Bitcoin to see about a 10% push to the upside before selling above 38,000, knowing that this is a major level and potentially expecting further downside, letting go of their position? Well, I don't think that's the case, because remember what happened recently. Beyond this one piece of institutional volume, we did see a 6-hour period of time and a 6-hour candle where institutional volume came in below 34,788 on Monday, and that was besides the volume that we saw initially when Bitcoin came below 34,708. So institutions still have positions in below 34,708 for the most part, and at this point, 36,500 being the midpoint of this range is what we have to hold if we want to assume that we're going to be seeing a fulfillment of this inverse head and shoulder pattern to 41,950. We have to move above 36,500 and stay above that level. You can see right now we have yet to come below 36,500. It is totally garden variety market behavior to get above 38,000, a major resistance, to then see some weakness and a push back to the downside, because of course it's the trick, trap, and frustrate crew. And we all know here on the Cypress channel, we want to wait for full hourly and 4-hour candle confirmations with good candle symmetry before confirming a breakout. We have yet to get that. We had one hourly candle close fully above 38,000 with an indecision wick to the upside. Nothing significant, nothing bullish just yet. Now, we do want to address this bearish tail that came in on this hourly volume. I'm not too concerned, because guess what? The bearish tail, totally fine with me, because of the fact that we saw a candle high of 38,919. All we really needed was a close above 38,000. We didn't even need to get towards 39,000 to get this hourly or 4-hour confirmation, but we did get to 39,000. So it's totally fine that we saw sell pressure. Is this just a relief rally? I think we're going to find that out here between 36,500 and 38,000. That is the most important range, snipers, that we are going to be monitoring heading into Thursday and then Friday, of course. Today is Wednesday, and so we really want to stay above 36,500 if we want to assume that we could potentially see 40,000 again, 41,950 being our first upside target with a full 4-hour confirmation above 38,000. That's what we're waiting for here on the Snipers channel. And to quickly address how the markets have reacted to Jerome Powell's FOMC meeting today, the DXY is starting to push up. Is that a puzzle piece that this truly potentially is a relief rally? I think that I'd be concerned if the DXY moves above 97. At this point, it could consolidate and it could have a cup of coffee above 95.8 885 as much as it wants. As long as it doesn't move above 97, then in my opinion, it's still very calm. And we know a calm DXY is exactly what we want to potentially see more of a relief rally, to see further upside in assets like Bitcoin and the S&P 500. Now, I also want to address, and I know a lot of people were talking about the NASDAQ recently dropping 4% and then ending the day up 0.5%. And that's only happened in 2008, right before a major recession. And it also only happened before the 2000 dot-com bubble. Apparently, there was never a time that the NASDAQ has dropped 4% on an intraday chart and then closed the day just 0.5% up after a small recovery. Apparently, that's a sign that institutions are letting go of their positions, but they're not letting the price free fall, and it's the start of a bear market. And so I'm going to address that here over the next few days by monitoring traditional markets for you guys a little bit closer. So I do want to pull up what's happening right now to the S&P 500, because this is extremely important with the FOMC meeting today. Notice how with the S&P 500, the reaction that we've seen so far, with less than an hour and 30 minutes left for this daily candle to close, was a rejection of the 200-day moving average. And so that is a puzzle piece. That is certainly not the most bullish puzzle piece. We want to get above this 200-day moving average for the S&P 500 for the E-mini futures contract, sitting right at 44.25, currently sitting at 43.40. And so that's something we're going to monitor. We have a couple days left to close this week to determine whether or not we're actually just seeing a relief rally to see further downside, or if we could have potentially bottomed out here for traditional markets, because we know ARK Invest ETF, one of the most bullish ETFs of 2020, sitting at its 200-week moving average for the first time since March of 2020, and that has not been the case since the whole bull rally started. So this is really the first real dip here for technology. And before my dog eats up this guy that's coming here wondering what we're doing here on the Snipers channel, I'm gonna go ahead and wrap up this video. Thank you all for tuning in today. Ethereum to Bitcoin chart, by the way, maintaining major support at 65,000 Satoshis. But I'm seeing just a little bit of some weakness here because we are back inside of this market structural level. Let me go ahead and get this dog out of the way in just a second. But if we look at what's happening to the Ethereum to Bitcoin chart, notice how we have price action back above 65,000 Satoshis. But I've been talking about altcoins being a lot riskier right now with this uncertainty with Bitcoin. And so we want to be a lot more careful here with altcoins. I know a lot of them that are, rallying up to the upside with this relief rally, like Luna and the CRO token, are doing very well. But the Ethereum to Bitcoin chart is what's going to lead the majority of these altcoins. And the fact that we broke back down into this candle, into this major support at 65,000 Satoshis, was not necessarily the most bullish case for Ethereum. But that's totally expected with a lot of uncertainty right now in the cryptocurrency market. So a lot of you are saying that it's time to short Bitcoin above 38,000. And so that's why I had to get this video update out to you guys to talk about whether or not this is just a short-term relief rally, or if we still have a potential bottom at 33,000 here with the recent move to the downside. So remember, 36,500, major level to watch, and then 38,000 right now. That's the range that we're playing in. And no matter what, we don't want to go below 34,788. If we go below 34,788, that is going to be a confirmation that there's potentially going to definitely be further downside. And so if that does happen, we will address potential downside targets. But for now, we're consolidating. There's no reason to get too fearful. And with that being said, let me go help out this Steelers fan right here with this Steelers jacket before that dog scares him away. And until next time, if you guys appreciate this content, remember to smash the like button for the YouTube algorithm, Snipers. And with that, I appreciate each and every one of you tuned into the channel. I couldn't do this without you. And until next time, as always, Snipers